Well, hello, Internet, and welcome to another live coding session. And today, I'm going to continue talking about technical analysis and the stock market. And what we're going to be talking about today is what is called the Ichimoku technical indicator. And it is largely considered to be what we would consider to be a complete technical indicator, in that it is going to provide us with some of the best analysis in regards to momentum in a security through numerous different lines. So I'm going to create every single line you see here so that you will quickly and easily be able to just type in a simple command and boom, you can get any type of momentum trading data that you would want on nearly any type of security. Feel free to ask me any questions along the way. We are getting into really deep level analysis here, and I'm also going to talk about sector analysis and correlation and how important it is to build portfolios that are with good assets but non-correlated assets. And I'll explain what any of that means, and if at any point in time I say a term you don't understand, just ask me, because guess what? I didn't know this stuff at one point also. So, I'm here to help you in both understand what's going on here, but also along the way, if I say something that doesn't make sense, just feel free to ask away. All right, so what have we done here so far? I am stretching back. All the videos are on all of my channels. So what I'm doing here is basically walking you through all of the knowledge, all in one file, and I will make this available. Here, why don't I just show you right here in the beginning where it's going to be at. So I have all the files on GitHub, and they're 100% free. I'm going to post right now exactly the link where you can get these files as soon as this video is done. Or if you're watching this as a non-live stream, you will be able to get it at another time. All right, so this, well, I guess I kind of have to move that, don't I? So let's bring this over here so you can actually see it. It is in the chat, but it is cut off here. So let's see if I can remember how to stretch this out so that you'll be able to see the chat. Well, that's not it. Okay, slight technical issue here. All right, let's get that out of there. Let's select just this guy right here and stretch it out. Nope, that's not it. Okay, I will get it. All right, well, whatever. I'm trying to figure that out, and it's very weird. Anyway, basically, you'll see it in the chat, and in any other channel, I will go and post it in the description. So you will totally be able to get this. It's just github.com, Derek Banis, and look for something that says Python for Finance. All right? So far, what we have done is all of this stuff. And it is mountains of data. The most important thing, if you watched the previous videos, is we're going to need to add some new imports here, which start right here and go right to there. And what this is it's going to allow us to work with our file system. So we're going to be pulling all sorts of data out. And here is everything we did previously. So all of these functions are going to be extremely useful whenever it comes to downloading updated stock data and going and getting different prices and making all sorts of different charts, calculating daily returns, cumulative returns, which are really going to be extremely important in this video, merging multiple different stocks using column names. Basically, every tool you could ever hope for is going to be here, and we were just there. We saw we added Bollinger Bands. That was in the last video, I believe. Talked about candlesticks, support and resistance lines, all extremely important, but the Ichimoku technical indicator takes it to another level. It is going to really allow us to very quickly decide if a security is something that we should invest in or not. All right, and this is all for educational purposes. I am not making any stock recommendations. I'm just providing you with the knowledge that you can then build upon. And as you can see, we are covering a lot. Now, the first thing I want to be able to do here is I want to go and get a list of all the tickers I'm analyzing. And I'm dealing with the Wilshire 5000 here. So what I want to do is go and get all of those securities. How I'm going to do it is I'm just going to call this files. And if you ever need me to increase the font size or anything, just say, hey, increase the font size, and I'll do it. All right. So we're going to go files is equal to x for x in and list directory, and I'm going to pass in a path, and I'm going to say if is a file. What I want to do is join the path, and if you're wondering what path is, it is just the directory where I have all of my data stored. So let's see here if I can look around everything. So grab this guy right here, and it's going to be different for everybody. So constants, where's constants? See, this is where I have all of my stocks stored. And let's bring this up so you can see what exactly it looks like. So boom, and just give me 1 second here. I just want you to be aware of what we have. So I have, I'm basically searching through a file, and I'm looking for all of the, a folder, a directory, and I'm looking for all of the stocks in said directory for the Wilshire 5000. And you can see it right here. All right, so we have all of these files, and I'm searching through this directory, and basically all I'm doing is grabbing all of the file names. And then from that, I will be able to go and create a list of all of these securities. And there's about 3,000 of them. And that's what we will be analyzing. 3,000 securities I thought was probably more than enough. Okay, and of course I have also in the Python for Finance on GitHub, I have all of the listed exchanges. I think I have almost 20 exchanges across the entire world that are all in this same exact format. You can download and you can analyze anything you would want. Any security in all the world. All right, so let me just grab this guy right here. I have multiple different monitors going all over the place. So let's drag it down here, and I think you understand now. I'm just cycling through the directory, and I am grabbing the file names in said directory. Hopefully that is 100% understandable. Okay, so there we are. Get stock file names in a list. So we're cycling through that path that we have there where the Wilshire 5000 stocks are, and we are storing them in a list called files. All right, so what are we going to do now? Well, I'm going to get the tickers. So how you do that is you go OS and path, and I need to split the data we have here. So I'm going to go split text, and for our names that we downloaded, and grab that guy. There's only one per, so that's all I have. For X in the files list. So files list, there we are. Okay, so we got all those, and if we want to print them out, you can see what they have here. List directory is not found. Did it maybe not get loaded? Let's see here. List directory path. I think maybe what happened is that it did not load those files that I wanted to import. So let's just grab this little guy right here and jump up and import them. All right, so can I grab them? It's not letting me. All right, I think I can grab it now. And grab this guy, and yeah. All right, well, let's just cycle up through. Okay. So what it's doing is I need to import some new libraries, and that's what I'm trying to grab here, but Visual Studio Code's playing games with me. See? List directory. This is the guy that I want. So I'm just going to come in here, hit Shift and Return, and it is going to load all of those different libraries for me, and then I'm just going to go in and jump back down here to the page. All right, so this is everything we have created so far. And let's see if it now will like it. All right, run, and name path is not defined. So what I'm going to do is I'm just going to say run all. And as soon as this pops up inside of here, then we will know that everything has been rerun through and we'll be able to go and continue with what we did previously. So it's cycling through all of this stuff and it is running. This is a good time to ask me a question if you have any questions on you. All right. And it's cycling through that. And you can see it's running through all of this different code that we have here for all of these different little guys. And let's go up through here. And is it doing that? Looks like it. Long-term function. There is all of the different cryptocurrencies we analyzed in the last video. And let's see here. Seems to be hung up on something. Apologize for that. Let's see what it's doing. So it's sort of hung up on this part, and it is trying to calculate all of this. Well, maybe the best course of action is for me to just shut that down. So let's go and call an interrupt on that. And Bitcoin is not particularly of interest to me right now, so I'm just going to comment that out. Everything else here looks like it is working perfectly fine. So what I'm going to do is just comment out everything and move on, because the Bitcoin part is not the part of this tutorial that is particularly of interest. Get rid of that. And this is just a function that we had before. And let's get rid of this also. So gone and gone. And whenever I upload the code, I'll make sure that all of this has been corrected. There's some rando problem that we had there. All right, let's run it again. And let's hopefully get all of our stock file names all downloaded here. This directory should work. The path should work. And all of those other different files. I would have liked to keep everything all in one directory. There you go. All right. So here are all of our different tickers that we just downloaded, and it output a list of said securities. All right. Now, remember, what is important is not the price of the security. What is important is the cumulative return. Not using regression analysis this time. No, I don't pay attention to stock prices. I pay mainly attention to the returns of said security. And I talked about that in the last video. Basically, a stock price, since you asked, let's go up here and I will show you why stock prices don't really matter. So if we come up inside of this guy right here, where is it? That's where we talked about Bollinger Bands. This stuff gets so deep that it's crazy. All right, so there's Apple and a whole bunch of other securities also. And where is that other plot? Okay, so this is an example of why prices don't matter in securities. So we look at this chart right here, and these are a listing or a plot of all the different FANG stocks. Now, if you look at this, you might say, okay, well, Amazon is the best stock that we have. All I simply did was print the price out for all the securities. And who is the worst? Apple, all right? So that is what this chart is showing us if we don't understand that prices don't really matter. So then what I did is I calculated daily returns, and I merged all of the different FANG stocks into one data frame, which is just like a big spreadsheet. And I said, hey, what I want you to plot this time is what would a security be worth if I bought a fractional $1 share of all the FANG stocks 5 years ago. So here we start at $1, and we can see the growth of said dollar over the past 5 years. And you will notice here that, in fact, if we just look at cumulative returns, return is what matters, not the price. Well, we see that Apple actually was the best performer, not Amazon. And with the price chart that you saw previously, actually Apple was last, and Amazon was first. Well, there's Amazon now is actually in third place if you actually look at cumulative returns. Okay? And we are not doing regression analysis at all. Whenever I did regression analysis previously, what I was trying to do was everyone was interested in meme stocks. So what I started doing was I created an algorithm that basically looked for similar patterns that occurred with securities that were similar to stocks that became meme stocks. And I believe that's what you're referring to. And in doing so, I was able to find CEI, and then I used all kinds of technical analysis to basically predict at a high percentage whether, when we're using technical analysis, you have to understand, all we're trying to do is increase the percentage that we are right. In technical analysis, there's no such thing as being 100% positive something's going to happen. The best you can hope for is we are 75% positive this is going to happen. Well, in the case of CEI, my technical analysis was telling me that I was approximately approximately an 87% chance of increasing a pretty sizable amount in a short period of time. So I used regression analysis to, and all regression analysis is analyzing the past and predicting what will happen in the future based off of past results. And if you want to know more about it, I can post that. But basically what happened is the technical analysis I then performed on said securities told me that CEI had an 87% chance of going up substantially. By substantially, I thought substantially was 20%, and I got lucky. Just 100%, like totally, I was lucky, and it went up 300% in 5 days. Believe me, that is something that doesn't often happen. It was lucky, all right? But I was 87% positive it was going to go up substantially, so there you go. But we're not often 87% positive of anything. Technical analysis is just using past performance to make predictions. But what variables are you using to predict future stocks? Well, I'm covering that right now. We use a whole bunch of different technical indicators, and this time I'm mainly focused on something called the Ichimoku, which I don't know if you saw before, but the Ichimoku looks like this, and that's what we're creating in this video. And basically, whenever we see, this is called the cloud. I'll get more into what the Ichimoku is as we continue, but we chart all these different moving averages along with the candlestick chart that we have here. And whenever we get a cloud that is green, like that, that is an indicator of momentum. And how much momentum you'll see in a stock price, meaning will it continue to go up, is based off of the width of the cloud. So if we have a green cloud that is expanding and getting wider, that is a sign to us that this stock is building up momentum. And we can expect that as the cloud widens and gets larger, that we will indeed continue a trend. Now here you can see it is converging right here, and then it went red, and that is a major sell sign. And that is why the Ichimoku is extremely valuable, because you can show this to anybody and they will instantly get it. It just makes sense. If you said, okay, yes, it's a security is moving past its mean average, but it's more than that. The Ichimoku is, as you can see, is extremely complicated. As I get deeper into it, I'll explain the Ichimoku in more detail. But it is numerous different moving averages. It is not just one moving average. It's a complex type of guy. Okay, so now in the previous video, I created a function that was going to allow me to generate cumulative returns for all of my securities and daily returns. You can't get cumulative returns if you don't calculate the cumulative returns first. So here are all of my stocks that I have. There's about 3,000 of them. And I could come in here and actually print out the overall length of them. Let's try that. One thing we can do here is I'll say tickers, and if you are on a Mac, you are going to need to come in here and go tickers like this, not on Windows. you have to go tickers remove, and you'll have to run .ds and store, just so you Mac users know that. There you go. That's something a Mac user has to do that a Windows user does not have to do. Okay, so that's one thing. I'll leave it there. Why not? Okay, and then what we can do is we can come in here and sort all of these different securities, and you can just go tickers and sort like that. And then if I want to find out how many securities I actually have inside of this, I can just run this guy. You can see we have exactly, the Wilshire currently has 3,000 securities, and I'm mainly targeting stocks that I have data on for at least 5 years. Okay, so that's all I'm interested in, is stocks that I can analyze over a 5-year period of time. So it's not the entire Wilshire, but I'm not really interested in a stock that was just created, 2 weeks ago. I'm only interested in hardcore, solid corporations. So now what I want to do is just cycle through all these tickers and then add daily returns and cumulative returns to all of the data I have. So I'm going to say in tickers, tickers like that, and I'll cycle through every single one of them. Because we're dealing with file systems, we're going to have to create try blocks here. And I'm going to say print like this, and I want output to constantly be coming on the screen so that I know that it's working on something. So I'm just going to say working on, and it's going to list the ticker that I'm currently generating data for. So after we do that, I can say I'm going to create a new data frame and get stock data frame from CSV. So I have all that in the previous videos. I downloaded every single stock, so we're using all real-time data, and I'll just output that. So we went and we grab all that new stock data out of a CSV file. And then what I'm going to do is I'm going to say new df is equal to, and I'm going to go add daily return to the data frame that we have. So it's going to calculate the daily returns, and then I'm going to get the cumulative returns afterwards. And I'm just going to pass in the data frame and the ticker symbol for that. And then I'm going to do the same exact thing for cumulative returns. So add, and, well, I'll do an underscore here, cumulative returns to the data frame. And I'm just adding, you can think of a data frame, if you don't know what it is just like a spreadsheet inside of a file. Okay? And again, I have to pass in the ticker name. So what are we going to do then? Well, I'm going to then save all of this new data that we have to our CSV file. So CSV path, I showed you what path is earlier. And so it's going to be path, which is the directory, X, which is the ticker symbol, and then afterwards we are going to type in CSV because it's a CSV file. Now, anytime I have a try block, the reason it has that little squiggle under there is it's saying, hey, if you use a try block, you have to catch any errors. Well, I'm just going to catch every single error, exception as EX is going to provide us additional information on what type of error actually occurred, if one did happen, and print EX is going to print out that error message. And I can just run that, and you can see it's working on all of those securities, and it's adding daily returns, cumulative returns, and then it's resaving all the data to my CSV files. And it is taking its time doing so. So, because I have 3,000 files and I'm updating numerous different things. So stock returns are just calculating the real price of the stock by factoring in stock splits and other. Exactly. Yeah, stock splits completely mess up the whole entire concept of the price. I say before, the best investment I ever made was I bought Tesla at $300 a share, and I sold it. This is the best and worst investment I ever made. I bought Tesla at $300 a share, and then I sold it at $1,000 a share because I thought it couldn't possibly go up. But the story gets worse because actually it's Tesla at a 3-for-1 stock split. So Tesla is now valued at, so that $300 would now be actually worth $3,000. So I could have had yeah, it was good. It was good investment, but it could have been considerably better. All right, so that's how stock splits affect prices and stuff. Can we find this? Yeah, I have everything on GitHub. Here, you want? While I'm waiting for this to make all these calculations, I will show you everything I have on GitHub. So here we are, like literally everything. Boom, here we are. I'm on GitHub, and you can see here I have Australia. I don't know if you can see this or not. Let me see. Can I expand this? Here. Yeah, everything's free, 100%. You don't even have to do nothing. Okay, so I have all this, the Australian Stock Exchange, Bombay. I have all of my different files for downloading all the stocks, FTSE, Euronext. I have numerous different exchanges inside of here. On top of that, I have all of my Jupyter Notebook files stored on side of there. You can go and click on them. I don't have this one on there because I haven't made it yet. You're watching me make it right now. But after the video, I'll go and correct any errors, add some comments where I think they are needed, and then I will upload all of this to this place. Python for Finance right there. Let's see if I can copy it this time and paste it in. Yeah, everything's 100% free, and there it is. Boom. There you are. You don't have to even sign up for nothing. I don't want your email, nothing. Okay, so there is the thing. And it didn't expand yet. What can you do? I'll fix that for the next video. So here we are, and that is everything. Now let's go and see if we downloaded all of our new data and created everything. And you can see here, GSPC, that is the S&P 500. So we also got that. All right, and there's my code file. All right, so here we are. And now what I want to do is talk about stock sectors. Now, remember we said previously, or I said previously, I guess, what we want to do is we want to find those securities that have performed the best. But we also don't want to take on any more risk than we feel comfortable with. So the concept here is anytime we buy a stock, you don't buy an individual security. What you want to do is maximize return while minimizing risk. And everybody says, oh yeah, I'm very comfortable with losing a certain percentage. But what we want to do is we want to lower that. And how we do it is by buying all good. All these stocks are still good, but we want to buy stocks that are non-correlated. What's non-correlated mean? Very simple analogy. Let's say that you bought Hershey stock. Well, let's even make it simpler. Let's say you bought a candy company. So what would adversely affect the price of a candy company? Like you really love this candy company and you think its stock is going to go up, but you want to minimize your downside risk. Well, let's say that the commodity of sugar, if it goes up, let's say that you also think sugar is a great investment also. But these are non-correlated assets. When one of them goes up over the course of the year, the other would tend to go down, and vice versa. So by buying non-correlated assets, what you're able to do is still get that great return and also get the stability so that your stock doesn't do this. Both of the securities are expected to go up ultimately over the long term, but in the short term, we don't want that volatility, and that's why you buy non-correlated assets. Well, one very simple way to buy non-correlated assets is to buy stocks in different sectors. Now, there is multiple different sectors here. We have the technology sector, and I have listed here exactly what I mean by technology: healthcare, financials, real estate, energy, materials, consumer discretionary, industrials, utilities, consumer staples, and telecommunications. All right? So what you want to do is you want to build portfolios that take from each of these sectors. And the ultimate goal is to buy the best securities in each of those sectors, then verify that they are non-correlated, and generate portfolios that create massive growth at a minimized risk. Make sense? Yeah, I'm looking for stocks with inverse correlations. That's all. But I don't want to buy bad stocks. Sometimes people are like, oh, but those stocks you're buying are bad. No, I'm not. No, it is possible to create, it is extremely possible to create portfolios of securities that are non-correlated, but at the same time, no stock in your portfolio is negative. Some of them tend to go down at certain points of the year, and others tend to go up during those same periods. We want to smooth the return. That's all we're trying to do. Okay? So there we go. We have all of our different sectors that we want to pull securities from. So now what do we want to do? I have to get a drink. Because last time I did this stream, I blew out my voice. Mainly because I sit here and yell the entire time. Okay. So what do we want to do? We want to go and get these different sector stocks that we have here. So what I'm going to do is I'm going to get data frames for all these different sectors. Well, I have that also. So I have another file, which I also have on GitHub. Oops, is that there? Yeah, there we are. Everything went crazy there for a second on my screen. So where do I have that stored? I have this, and is it in Python for Finance? Yes. So I'm going to go Python for Finance, and then I have stock sectors. Okay, so I have a separate file. I'm going to show it to you right now. So here are all of these, and what I have is all of the symbols, stock symbols, the names, as well as the sector that those are in. So what I want to do is I want to take this Excel file, pull all of this in, and then separate all my different securities based off of the sector they're in. And I'm going to show you how to find all the top performing stocks in different sectors. I don't want to change anything. Okay. So there we go. And here we are. So how am I going to do that? Well, I'm just going to say, let's go and create sector data frame. Sounds good. And I am going to, like this, PD, that's a reference to pandas. Data frames are panda files, okay? And I want to read the stock information and sector information I have in that file that I just showed you. And I am going to copy this. So let's go get this. Let's actually open that up. Yeah, that's all right. I think I can type in this file name without having to copy and paste. Let's see if I'm good enough to do that. Okay, so the name of the file is Python for Finance. Clearly, yours will be different, and it will completely depend upon where you save this file information. So we'll go stock sectors, and it is a CSV file. I think I typed that file name correctly. And let's go and find out. So I'm going to do like this. And hey, look at that. So there you go. All of that stuff that was in the CSV file, I now have here. All right. So now that I have that, what I want to do is I want to get all of the industrial stocks. So I'm going to go industrial data frame is equal to, and I just go the sector that we have right there. And what I can do is go location. And what we're looking for is the sector data frame, and specifically sector, which is the name. Here, let me show you. Well, yeah, I think you know. It's the column name. That's what I'm doing. So I'm looking for the sector, and the name that I'm specifically looking for inside of it is industrials, and that is how it is stored. So if I do that, let's go and verify that I was able to go and grab just the industrial stock data from it. And I was. Here are all of the Wilshire 5000 stocks. There's 499 of them in the industrial sector space. Okay? So I just grabbed all of them and I threw them into a data frame. So I need to do this for all the different sectors, and then we'll be able to find the best performing stocks in every single sector, and then we will then be able to run the Ichimoku technical indicator on this and this data. All right. I think it's also worth looking for names of stocks with no earnings that are valued on by reputation, but can make it's completely up to you. I'm not a big meme stock guy. I have a separate video where I showed you an algorithm where I tried to predict meme stocks, and like I said, I got lucky. What I'm mainly doing here is trying to teach fundamental, solid investment knowledge. I'm not trying to make wild predictions on different securities. I did that once. Somebody dared me basically to make a crazy stock pick, and I did it. But that's normally not what I do. Sometimes I place puts and such on different securities, but mainly what I'm doing is, which is very easy to do with the Ichimoku. So the Ichimoku is going to tell you entry points and exit points right there on the screen. And also, I talked previously about resistance lines and so forth. So, pretty cool stuff. All right, so what I want to do is get all of these other guys. So we have all our industrial stocks, and now I want to get the healthcare and healthcare in that Excel file that I just showed you. The name inside of the column under sector is going to be healthcare, like that. And that's going to get me all my healthcare stocks. Let's just verify. So health and data frame, and sure enough, there are all of our securities there. All right, good stuff. So I want to do it for every single security. And of course, after this is built, all you have to do is just run the function, and all this stuff is automatically generated for you, which is ridiculously awesome. And then you can stack the functions and be able to pull up stock data on numerous different things. Whenever I talk about the Ichimoku, and remember I said about how as the cloud widens, that is a major momentum buying sign. Well, guess what? All of that data for the Ichimoku technical analysis chart that we plot, we can just say, hey, search through the whole entire universe of securities and show me the securities ranked in order that have the widest growth or the widest cloud. And it just spits it out. And there you go. What is that? I find Robinhood is perfectly fine. What's wrong with that? Yeah, I don't pay commission. Why pay commission if you don't have to? I mean, I see no reason to. Robinhood's definitely perfectly fine for anything. There's no negatives as far as I'm concerned. Okay. But use whoever you want. But just understand that, I mean, I used to be a broker, and they don't teach brokers this stuff, if you're wondering. Maybe some of them. I think in the most part, though, what they are doing is, if a broker does know this type of stuff, it is because they took the time to learn it on their own. This is not the type of stuff. Actually, brokers are told to repeat this phrase over and over again. Past performance is not indicative of future results. And, but really, in my opinion, if you can't look at past performance, then what is the point of doing anything? Because that's the only thing that does matter. So, there you go. But it definitely is not a guarantee, and I don't want to lead anybody to believe it is. We're all playing a percentage game here. We are not playing a game of guarantees. And I'm referring to the Excel file that I showed you previously so that I type in the right consumer staples, the proper file column name. Okay, so we got our consumer staples, and what else do we want? I'll just call this discretion, and consumer discretionaries is where this is. And one thing that might cause you an error is the file, the Excel file that I'm referring to. If you have that file open and then you try to run your code on it, you're going to get an error. Be well aware of that. If you do get an error at any point in time, always check, do I have a file open on my system that I'm also trying to access from my code? Always remember that as probably the most common error that you could potentially have. Don't the brokers who trade for big investment banks usually have finance degrees? Not always. No. I'd say it's not even likely. No. Not in my experience. Who just got a... Series 7 is a joke. The Series 7 doesn't teach you how to trade. I took the Series 7 and I got like a 97% on it, and I only had a week to study, and that was while I was working. The Series 7 is like this thing that people talk about like it's the hardest test on earth. It is not. And the Series, I think it's the 33, the commodities test you have to pass. All it is an ethics test. It has nothing to do with trading. It's an options trading test, and it has absolutely nothing to do with knowledge on options trading. It's like 100% ethics. So it's really funny. Yeah. It doesn't, yeah. And most traders don't know anything. Basically, my goal was to become an analyst. And what I learned, the person I learned a lot from, most brokers don't learn any of this stuff. I mean, unless things have changed dramatically, which as far as I know, they have not. And let me tell you, if you find a superstar stockbroker, he is not going to talk to you unless you have many, many, many millions of dollars. They just have no interest in talking to you. You're not worth their time. And so I'm just telling you facts. But what happened with me was I came from the programming background into the financial world, and a senior broker who was exceptionally intelligent, he said, I want you to take what's in my brain and put it in that machine. And so he taught me all that stuff, and I basically did that. That's what I did. I took everything he knew and stuck it in the computer. All right? So that's where I come from. So consumer, let's go. I'm getting sidetracked, and when I get... That's perfectly fine that you ask questions, though. Ask every question you possibly could have, because it's the only reason I'm doing this. If I was just sitting here and talking to myself, then that would be quite a waste of time for everyone. So discretionary, I have to look at this, so I spelled discretionary properly. I think I did. And let's move on. So discretion and utility, data frame, and we'll come down here, and this will be utilities, and we're getting every single sector stock, so we'll be able to do all that stuff. So financial, and we will go, and that is in the financials column, financials, and also we will go material, like that. And the name of that, the big banks are hiring a lot of physicians. Yes, they do at the investment banks. The investment banks, the people that never come in contact with clients, yes, they do hire a lot of mathematicians that do basically this stuff. That's what I'm doing right now. That's the same stuff they do. I know one of them. So she's an intelligent girl, and she works for one of the big investment banks. And I spelled materials wrong. So let's go materials. I have to be really meticulous with everything I do here, because if I spell one thing wrong, everything doesn't work. So let's just call this RE state, and this is going to be real estate. And let's get rid of that, and come down here, and energy. So let's go energy, data frame, and the name in that column is actually energy. All right, so we have all of those, and let's run it. And I didn't get any errors, so let's hope everything is good here. So now what do I want to do? Well, I want to go and return a data frame with cumulative returns for all of my different securities. Let me get a drink again. Feeling good. Okay. So what can we do? I'm going to create a function, and what it's going to do is just get the cumulative returns for the stocks, and it's going to be passed the stock data frame, and I'm going to create a couple lists. I'm going to have one that's going to be called tickers, and I'm going to have another one that's going to be called cumulative returns. And I'm going to save these cumulative returns for all of these different securities all inside the data frame. And then I'll be able to use the Ichimoku, this is the full name by the way, to go and create all those beautiful charts. So let's go for index and row in my stock data frame that is passed inside of this, and then I have to create an iterator, this, and that's just going to cycle through all of that for us. Then I'm going to create a data frame, and I will go get I'm going to call a separate function called get stock data frame from CSV. I thought it was that one. It is. And then I'm going to go and get each of the individual symbols out of this. And then I can go and, what do I want to do here? Well, one thing I want to do is if I get into a situation in which I have, yes, in this situation I am using stock returns, but I use price data with Ichimoku. As you can see here, the Ichimoku is quite diverse. There's multiple different conversion lines and support lines and different moving averages that are quite, they're basically using price data here. I am using cumulative calculations, returns, to be able to find which securities in all the different sectors that have the greatest rate of return over a 5-year period, which can easily be shifted into 1-year periods or whatever you find convenient. Okay, so what we want to do here, I'm going to say if the data frame, and in this situation, if we find a ticker that doesn't exist, we just want to delete it. So I'm going to say if the data frame, is none, well, I am just going to pass. All right, and pass just means do nothing in the Python world. So I'm going to say else, and I want to store the tickers that I have in my tickers list that we have. And specifically what I'm going to store is the same as this guy right here. So let's just copy that and paste that inside of there. All right, after we do that, I will then go and get my cumulative information. So I'll say cumulative data frame, and its column name is going to be cumulative return. So like that, and we calculated cumulative returns previously. And I want to get the last cumulative return. So I'm going to have a column that's going to have the cumulative returns for the security over the life that we are analyzing. And I want the very end. I want the cumulative return at the end of the 5-year period. So if you want that, you just say, I got it in the right place, location, and if you want the last one, -1 gives you the last one. All right. So then I want to also store the cumulative returns inside of this list right here. So cumulative returns, and I'll just append the ultimate cumulative return for that. So what I'm trying to do here is I'm going to take all of the industrial stocks, for example, and all the healthcare stocks. I'm going to throw them into this function. It's going to cycle through all of them, and it's going to generate the cumulative returns and the stock symbol that relates to the cumulative returns, and output all that information. Okay? So hopefully that makes sense. And we have all that. And then after we are done cycling through all of this, what we're going to do is we are going to return, go like this, and data frame, and I am going to store inside of this only the tickers and cumulative returns for all the different stocks. Okay? And that's going to return me a new data frame that I will then be able to utilize to print out on the screen which securities in all the different sectors have had the greatest cumulative growth rate over a certain period of time. Okay? That's it. That's all we're doing. It sounds kind of complicated. And believe me, once you master the art of talking about this stuff, you'll sound brilliant. But at the same time, you'll completely understand what you're saying, because, you know, it's not really that complicated. I don't think so. And if I ever say something that does not make sense, feel free to tell me. I won't think less of anybody, of course, because, like I said, it wasn't terribly long ago that I had no idea about any of this stuff, and that's the only way we learn anything. All right, so that's going to generate our cumulative returns for us. And now I'm just going to call that for every single one of these guys. So come in here, and let's call this industrial. Whoops, can I say I can't even spell industrial? What am I talking about? All right, so industrial, like that. And then I just call get cumulative return for stocks, and that's, you know, the function we just created. And I'm going to pass inside of it the industrial data frame, which is this guy right here. And I just have to do that for all of my different securities. So let's just grab that. Well, actually, let's run it and see that it works. So I'll say industrial, there we are, and run it. Oh, got an error. All right, let's figure out why we got an error. Data frame object has no attribute. Just a typo. Do you use any stock trading platforms or recommended goods? I use everything I do 100% on my own. No, I download everything from Yahoo Finance for free and do all the analysis that I do 100% for free. I'm not a day trader. I don't have enough time for that. But this stuff can definitely be used for day trading. It's just I do more long-term trades because I have other things that I'm doing. This is exactly the same stuff. You can use the Ichimoku to do analysis for day trading also. But you can also use it for long-term trading. You just change a couple different periods in which you're downloading data. You analyze for the day, normally 3 days worth of data, let's say maybe every 5 to 10 minutes, sometimes 15 minutes, and make predictions based off of that. But basically all this stuff works exactly the same no matter what you're doing. There we are. So yes, what do I want? Okay, well, all right, so let's figure out where I made this error. Iterate rows. So where is that at? It normally gives me a nice little arrow here for where I have the error at. Don't see it. Let's see. Iterate rows. I thought that's what it was. Iterate. Oh, I put 2 T's. Sometimes looking at stuff, you don't see what you are looking at. All right, so let's run that again, and let's run this again. File doesn't exist. That just means it's looking for a ticker that doesn't exist. The Wilshire 5000 doesn't have every single security in it. So that looks perfectly fine. And you can see here what it did was it generated cumulative returns for every single industrial stock and put them in a list right here. And then what we're going to do is we're going to go inside of there and we are going to sort them and show all of the best securities. That's what we're interested in. So what we want to do next is we want to do the same thing, but we want to do it for healthcare. So healthcare, and I'm just going to call this, let's do it like this. Let's be professional. And the healthcare data frame is up here, and it is health DF. So I'm just going to copy that, come back down inside of here, and paste that inside of there. And if you guys have any other questions about do you have any questions about things you'd like me to cover, feel free to ask me. I'm willing to cover just about anything. There we are. And then we're going to do the same thing for information technology, and I believe that's just ITDF. Yes, it is. So we'll just come in here, get rid of this, and in a couple minutes, we will be able to find all of the best performing stocks in every single sector, and then we can use the Ichimoku to find the best of the best. So cumulative like this, and cumulative data frame. So there is that. Paste that inside of there. Next one I want to call staple. Like that. And let's go like this. And let's, I forget what it's called. I think it's called staple DF, and it is. So let's just call this staple DF. And then paste that inside of there. Next one is the discretionary. So discretion, I'm just going to call that discretion. And what do we want? Let's just call, is it also called discretion? Yes, it is. So I'm going to copy this, paste that down inside of here also. And then I'm going to copy this and throw this in there as well. And this one I'm going to call utility, and grab this. So I'm not only sort of teaching you about all of these different technical indicators and such, I'm also teaching you how to write them in code so that you can then, with that knowledge, be able to expand into other areas. So there you go. Yes, cumulative return is just a single value. But what we did was we found the daily return, and then we calculated that, printed that next to every single day, and then we got the cumulative return is day over day return, and then ultimately the cumulative return at the end of the 5-year period is going to be the total cumulative return over a 5-year period. Okay, makes sense? So I don't know, predict support and resistance for it. You'll see how the Ichimoku works whenever I cover it. It's ridiculously cool. It really is a very, very cool indicator. So utility and finance or no, I think I called it something different. Yes, I called this financial data frame. And like I said, I know I'm doing this in a way that is covering everything in massive detail, but that is my goal. I want you to understand every single line of this code so that you'll be able to come in here and completely understand it so that you can mutate it into basically anything you could ever want it to analyze. And I think that if you have this whole entire file and you download this whole entire file, which is free, it's in the description. I'm not selling anything. You can know more about financials than most human beings that you could ever imagine seeing. So material, data frame, I thought that's the name of it. Let's just grab it right here and paste it right there. There we go. And there it is. All right. And I have real estate also. So let's paste that here. Grab this little guy right here so I don't have to type all this out again. And restate like that. And this is also called restate for that data frame. And I have one more. And then we're going to be able to see all of the stuff here. And the fruits of your labor, or my labor anyway. Because you can just go and download this stuff. You don't have to sit there and print it all out. All right, so there is every single one of those guys. And it's saying file doesn't exist. That just means that there are certain securities that are listed as industrials, for example, that are not necessarily in the Wilshire 5000. Okay, so that's perfectly fine. That is what you should expect. There is an endless amount of things to learn, basically. How did you learn so much about programming? So many different things, and I feel like there's still there. You will, if you spend your entire life. I basically got into programming when I was 10 years old with a TRS-80 that my neighbor was throwing in the garbage. So, and that was like 35 years ago. And I have basically never stopped learning ever, even before that. And I grew up in the middle of nowhere. We didn't have anything. We didn't have a television. We had nothing. And I actually loved to read books and learn because it was basically the only other alternative. The alternative was to go out and work on the farm, which wasn't particularly fun. And I self-taught myself basically absolutely everything. And if you're wondering if you devote your life to learning, if it's humanly possible to learn everything there is to learn, I'm not there yet. But I've learned a lot of stuff. But the problem is whenever you learn new things, you tend to forget things. There's all kinds of tricks to remember everything, though. Yeah, there's never-ending supply of things to learn, basically. Which is a good thing. I apologize for my water drinking, but if I don't do that, I will blow out my voice and you won't be able to hear me. Okay, so what do we want to do now? So we got all of these different guys. And one thing that I want to do... accidentally hit that. Okay, yeah, I accidentally hit it. All right, so this is the Ichimoku. All right, let's get rid of this for a second. All right, here is the Ichimoku, and it is largely considered to be what we would call an all-in-one indicator. What it does is it provides information on momentum, support, and resistance. In the last video, obviously, support just means the amount, an ultimate price that we do not believe our security is going to break through. And resistance is an ultimate price that we don't expect our stock price to go above. All right? And momentum is a sign of how strong the current path is. So if a security is going up and we say it has strong momentum, that means that we expect it to continue to go up. If it's going up or down, whatever, and it has weakening momentum, that means that we believe that the trend is no longer going to continue. All right? So and the Ichimoku provides us all that information: support, resistance, and such. It has 5 different lines. And here, somebody who had said something to me previously about using this as a day trader. Whenever you are working in short term, you're going to create 1 minute or 6 hour moving averages, while long-term traders are mainly going to be focused on daily or weekly data. I'm mainly going to focus on daily data. So all you need to do if you want short-term trading Ichimoku charts, all you need to do is change from daily to 1 minute. Okay, there you go. Now all of a sudden you have a day trading platform to work off of. Yeah, no, I started forever ago whenever I was in that. Why is everything Japanese? Because a Japanese person created the Ichimoku technical indicator. That's why. And you can see here, this is the original name for all of the different lines. I have the Japanese version, and then I have the English translation of that. I will mainly be referring to things as conversion lines and baselines and all of that other different stuff. Go to look at it. Yes, I'm going to look at all kinds of stuff as the tutorials continue. Thank you for asking all the questions. Everything that you throw on here, yeah, I'm going to talk about head and shoulders, patterns, and all these other different things. I'm probably going to be getting into that, probably not the next video, but the video that follows after that. And mainly I'm going to focus on how to take all of this stuff and convert it into, have the computer do it. Because, yeah, the Ichimoku looks pretty and all, but what's a lot more valuable is to say, I don't even want to look at the chart. I want the computer to look at the numbers and tell me what is the most, what security is showing a rising price level, and at the same time showing the greatest amount of momentum. And if you understand how the Ichimoku works, you can do that. You can literally say, search the whole entire world of stocks and show me which stock in the entire world is showing the most growth momentum, out there. And it's a computer. You can do that, and it will spit all that out. Okay? And I think I can turn, yeah, and this is basically how you calculate all of the different lines and so forth and so on. So what I want to do is I actually want to go and create the function that's going to generate all the Ichimoku chart data. Okay? And I think I can open that there. Now I can see your chat on my screen as I go here. Let me see. What do I have to do? All right. The very first thing I need to do is I need to be able to handle the changing the colors of the cloud. So the ultimate goal would be to have the program tell you what's going. Yes, that's exactly the ultimate goal. The ultimate goal here is to take all of the technical indicators. Here, where is it? Here it is. I'll show you some. Okay. I don't have my other book. But basically, most of what I'm saying comes from 2 books. One book is by a gentleman named Bodie, B-O-D-I-E, and the name of the book is Investments. If you read that book, you'll learn a lot of what I'm telling you. And the second book is this, the Encyclopedia of Chart Patterns. Now, what the Encyclopedia of Chart Patterns, see, it's just a whole bunch of charts, see, like this stuff. So and it's kind of big and whatever. But ultimately, what this book does, this book, what my goal is to take the investments book and this book and combine them into tutorials like this so that you will basically be able to teach and understand and will teach your computer to basically take all this knowledge and spit it out for you to digest, and then analyze all that data and have it make predictions. And even better yet, because I said previously, yes, that's exactly what this is. Everything is based off of kind of, yes, psychological information. And then also a lot of things play into analyzing technical analysis, because you have to understand other people are analyzing technical analysis, are using technical tools to make stock market predictions, and it sort of just builds upon itself. So anyway, this book, am I holding it up right? That book right there. I don't sell this book. People always think I'm trying to sell stuff because that's what everybody does. Basically, what this book does is it says if you see this indicator doing a certain thing, that means that it has a 62% chance of continuing to do that thing. So what my ultimate goal is, and a lot of the stuff that I personally do, is I want the computer to search for all of those different patterns and then make an ultimate prediction of which securities have the greatest percentage chance of either going up or down. Okay? That's it. So I'm taking this book, whatever, and having my computer do all the calculations. And along the way, I'm teaching you everything. And there you go. All right. So where are we at? I'm getting confused. Okay, so let's, I want to show you something here. So here is the Ichimoku again. Okay, so what I have to do here is I have to generate this cloud. And how I do it is I'm going to change the fill color between these lines. Whoops, I'm going to do it this way. I want to change the fill color between these lines whenever the momentum is positive, and change it to red whenever the momentum is negative. So I have to write a function that is going to do that for me. It's pretty simple. So I'm just going to say get fill color. Sounds like a good name. And we are going to pass in some type of label data. And I'm just going to simply say if the label is greater than or equal to 1, like that, I am going to say that I want to return RG. I'm going to return a green. So how you do that is like this, and this function is going to give us green, and throw that there. And I also want to put some transparency behind this. So this is the red part, green part, blue part, and then I'm going to have a transparency, and let's say I want it to be 40%. And there it is. And right like that. And let's just copy that so I don't have to type it out again. All right, so there we go. And I'm going to say otherwise, else return, and in this situation, I'm going to have it be bad. So I'm going to have that be red, and that's that, and everything else there is perfectly fine. And there we go. All right, I'm having a minor technical issue, so I'm going to be back in literally like 10 seconds. So just give me one. All right, I'm back. Okay, so got all of this all set, and now I need to create the function that's going to actually generate and print out all of the Ichimoku charts for whatever security we pass inside of it. So I'm just going to call this get Ichimoku. Maybe we'll make it capital because it's so important. So Ichimoku and ticker, like that. There we go. And what do I need to do first? Well, the very first thing I'm going to do is I'm going to download all real-time stock data. So I want to download a year, and then I want to get the price of said security for every single day. So let's go, just call it data frame is equal to, and download like that. And it is tickers, even though in this situation we're only putting one ticker inside of it. So let's get that ticker. I'm going to say that I want to generate 1 year of stock data, and I want interval is how often you want to get the price. So I'm going to say I want a year's worth of data, and I want the price on every single day. Now, how you calculate the conversion line, that's going to be your high value. We're going to go and generate the stocks here. Let me show you so you have 100% understanding of what I'm doing here. Where is it? Well, sure, stocks. There's that, and this. There. See, here is all of the stock data that I downloaded. So this is, it has an open, high, low, close. I need all of this information to be able to create the Ichimoku, and also to create and draw my candlestick charts. Okay, make sure you close these files after you open them. If you do not, you're going to get errors. So how you calculate it is you get your high price, and we're going to do a rolling moving average window, and it is going to be over 9 periods. And I want the maximum value over that period of time. So, and here is all of that stuff. So here's a conversion line, and it represents support, resistance, and reversal, and it's used to measure short-term trends. So that is what we're going, maybe I should go and label this. So I'm going to call this, we are going and creating the conversion. But really all you need to worry about is the cloud, but we need all this other stuff to be able to generate the cloud. So I also want to get the low value over this period of time, equal to data frame, and low is the name of that. And we're going to create another moving average like this, and it is going to also be over 9 periods, and we want the minimum. So there's that. Okay, so then we want to ultimately store this in a new column for our data frame. And how we do that is we go high value, and we add low value, and then we divide both of those values by 2. There you go. That's how you create our conversion line. Up next, you're going to create the baseline. So baseline like this, and it is going to be almost exactly the same. So I'm just going to copy both of these, and this is also the same. And we're just going to be using different periods for making these calculations. So I'm going to call this high value 2, and I'm going to call this low value 2. So we got our high, low, and we're just going to be converging this time on 26 periods. Now, when I say 26 periods, what I'm saying is 26 days. This is 9 days, and that's all determined by the interval. If I was working instead with 15-minute data, then that would be every 15 minutes. That would be 9 15-minute averages, okay? So hopefully that makes sense. All right, so, and we're going to change this to baseline like this. There we are. And we have to change this to high value 2 and this to low value 2, but we are also going to divide by 2. So now we got our conversion line and our baseline. And if you want me to, I can read what all these do, but I think it's better to just cover what I'm doing, how I'm making the calculations. Then after you see the chart, I will explain what all the different lines mean, because I think that makes sense, more sense. Now the spans are actually going to create our cloud. They are either going to be above or below. Whenever span A is above span B, you're going to have a green cloud. Whenever span B is above span A, you're going to have a red cloud. Or at least that's the color I made it. It's very commonly used because it kind of makes sense. You know, red means stop, green means go. Okay, what else do we got? So we got both of these guys, and then I'm going to go data frame, and you have to get our conversion and add to it the baseline. See, all of these play off of each other and then provide additional data on each one. Ultimately, I think there's 11 different indicators in Ichimoku. It's ridiculous. But what's great about it is, like I said, you just pay attention to the cloud, and that is the most important part of it. So we'll say, and we have to shift this over by 26 periods. And that just means that we are going to be moving backwards and forwards through our data, so that we'll be showing old data and such. Then I'm going to create another one. It's going to be called high value 3. And it is going to be calculated by getting the high. Oops, spell high correctly. Whoops, went to the wrong place. Let's get rid of that right there. And we're going to be doing a 52 period rolling average for this. And in previous videos, I talked about moving averages and why they are important. So we'll go like this. And we want our maximum value here, and guess what? We're going to do the same thing. We're just doing different moving averages, and then they are going to be bouncing off of each other and playing off of each other depending upon what periods we're working with. All right. If you have any questions, if you want me to point you towards a video where I talk about moving averages in more detail, just leave a message, and I will point you directly at that video. I just don't want to cover stuff that I've already covered many times. So let's go high and low, and this is 52, and this is just minimum. So we want our minimum value over that period of time, and we're going to chart that. So df span b is going to be equal to, and again, we're going to do the same calculation here. I'm going to type it all out so I don't mess it up. So I'm going to say high value 3 plus low value 3. There it is. And divide that by 2. And then we have to, again, shift it. So we'll go shift 26. All right. All right, so we got span A and span B. Up next, we need to get our lagging span, and that is going to be, we're going to shift back 26 periods. So we're basically going to have a moving average, and we're just going to show it in the past. So if today was the very first day we were charting, we would actually be showing with this indicator where the price was 26 days prior, okay? That's what our lagging span is. And all of these guys just build upon each other to provide ultimately the cloud, which is our ultimate goal. The cloud is the goal. TF, and we get our closing price, and this is a lagging indicator, like I said. And to shift backwards and show data from 26 days ago, you just say negative 26. You know, show me the old data. Then we're going to also chart a candlestick chart, and we'll do candlestick like this. And the candlestick chart, of course, is going to show high, low data, the opening price, and the low price. And it's also either going to be green if the stock increased in value and red if it did not. So we have to go and provide all the information. The first piece of information we have is the index. And that is the date for all the price data. So we'll go and get that, and then we're going to say open, and we have to provide whatever the opening price was. And if you want me to show where I'm grabbing all this from, because I see there's people coming in and leaving and so forth and constantly, so if anybody wants me to show what the file looks like where I'm grabbing all this information, just tell me in a message. I will gladly do it. All right, so we'll just go and get our high price from, of course, the high column, and we will also get the low price from the data frame, and the low is the name of the column in that situation. And we will also get the closing, which guess what, is the data frame and the closing price in that situation. And then let's go and give it a name. It's very important to name everything because this indicator is so ridiculously complicated. If you do not label things, it's going to cause complete havoc because you're not even going to understand what you're looking at. Okay, so I'm going to now create two data frames. One data frame is going to be completely focused on filling the cloud with either red or green fill colors, and the other one is going to plot out all the other indicators. Crazy stuff. All right. How I'm going to do this is I'm going to copy the original data frame that we were working with, and then I'm going to start plotting. Most of the stuff we're doing here is almost done. So we will go figure is what we are going to plot all of our plots in, and then I need to go and calculate whether I am going to be filling in the cloud with red or green. So we will do so. I'm going to say the label is going to be equal to NP dot, NP stands for NumPy, and I'm just going to put a condition inside of here. And it's going to either store a value of 1 or 0 depending upon the condition. Remember I said whenever the span line is above the span A is above span B, it's going to be green, or 1 in this situation. And when it's below, I'm going to make it red. So I just want to throw a condition inside of here, and it's going to be when span A in our data frame is greater than data frame and span B. Well, whenever span A is greater, I'm going to make it 1, which is ultimately going to make the cloud turn green. And whenever it is 0, it is going to make the cloud turn red. All right. And I'm going to also come in here, create another one. I'm going to make this group in lowercase, and I can then say data frame label. And in situations in which it's now label, as you can see, is either going to have values of 1 or 0. And then group is going to then come in. This is not equal to. We'll say data frame and label. And we're going to shift this and find our cumulative sum on it. I talked about cumulative sum a whole bunch of times. So cumulative sum and run it. All right, so what else are we going to do? Well, data frame is going to be equal to data frame and group. And this data frame is only going to contain information on whether the fill should be red or green. Okay, that's all that does. Then I'm going to create a list here. And with this list, I'm going to say for name and data in this data frame that has all the information about reds and green fill colors. Well, with this, I'm going to go to DFS and inside this list, append all of that data inside of it. And for the data frame in this list of data frame information, I am then going to say figure add traces, and add traces is going to, whoops, let's go, I accidentally clicked on that. Let's get rid of this and just start over, otherwise I'll probably introduce a bug. So I'm going to say figure add traces, and I'm going to create our lines for the span A and span B, and then on top of that fill in with red or green. So crazy stuff. So here I'll say go and scatter, and then I will do the data frame, and the index of course is going to be the date, and y is equal to data frame and whatever the value is for span A. So this is going to print out the span A line right like that. And then we are going to just come in here and define what color the line is going to be. So I'm going to say line and dictionary like this, and the color is going to be equal to, and I'm going to say RGBA, and I'm going to make the color be black. So like this, and there we go with our black color, and close that off, and that is the whole entire thing. All right. Now the next part is important because it's not only going to draw the A span, but it's also going to draw in the span B, but it's also going to draw in the fill color between the lines. I know this is crazy, but after you get through it, it's basically just going to spit out this information, and you will not really even need to understand why it's doing what it's doing. It just sort of does all the work for you. But like most things in life, if you want to do awesome things, it's not normally easy. So here, this fill thing is actually going to fill in the cloud with either red or green. That's what the fill means. And just make sure you put your comma in the right place. And fill color is we're going to call that function we created earlier, which is either going to say fill it in with red or fill it in with green. And how you do that is, remember, we put 1s and 0s inside of the label, and likewise the location like that. All right, so we generated all of those pieces of information, which is basically the cloud, which is the most important part. And now it's just a matter of filling in all of the additional information, all the other lines for the Ichimoku. So we're going to say X. Again, this is going to be the same every single time. It is just simply going to be the date. That's what the index is for every single thing in our data frame. Y is going to be df1, and baseline is the name that we gave that column. And then after this, we can then come in and go line is equal to, and dictionary is going to define all of the coloring and such for all of our different stocks. Now I use very specific colors because I've tested them, and I think they are the quickest or the easiest to immediately be able to decipher. So that's the reason why I have pinks and blacks and purples. I think they are easier to see, but I'm also colorblind. So, but I've had other people say that they thought that they were easy to see, so that is why I continue to use them. All right, so this is your baseline chart, and there it is. And it's basically the rest of them are the same. It's just changing a couple things. This is going to be our conversion line. Go and this, of course, the name of this column is conversion, like that. And what do we want to do? Let's make it black. So there it is. It is black, and I'm going to change its width to 1 because it's black. It's going to be easier to see than pink. And of course, this is going to be called conversion. And there we are. So what are we going to do next? Throw this in here. We're going to get our lagging line. So we'll throw our lagging line inside of here. And this is stored in the column called lagging. And let's say we want to make this purple. These are going to make very pretty little charts that are pretty easy to see. And this is going to be lagging. And there we are. So there's our lagging line, and then we're going to have span A and span B lines. So span A. Remember, whenever we were plotting with span A and B before, all we were plotting. What am I programming? I am. Well, did I accidentally turn off the chat? Oh, I don't. Oh, I see you over there. Basically, I am making a program that is going to look through 3,000 different stock securities and return with the security that has the highest likelihood of increasing in value. That's what I'm programming. Let's stick you right there. All right. Thank you for asking me. It is ridiculously complicated. It's called the Ichimoku, and it is widely considered to be one of the most accurate technical analysis tools or indicators that exists. But it is ridiculously complicated to put it together, and I'm just trying to explain exactly how to do it because it's nuts. All right, so thank you for asking. It's pretty. Whenever it's done, you'll be like, wow, that's ridiculous. And I guarantee you that if you know how to do this, you will be one in a very short list. It's ridiculously interesting. It's basically a license to find the best stocks to invest in. All right, so for this one, I'm gonna make it green. I'm almost done actually with 2, and I'm also going to make, because I said the cloud. Here, you want to see real quick? This is what it looks like. This is the Ichimoku. I'm writing a program that is going to create exactly what you see there. It's actually not all that complicated. It's complicated to create, but it's very easy to read. Basically, the way you read this is, if it is green, that means that the security is a very positive security, and depending upon the width between the bottom line, this is span B, this is span A, depending upon how wide those are, that is a positive indicator that the momentum and the stock will continue to go up. It's the creation of said Ichimoku, which is the complicated part, but I'm showing you how to do it. But at the same time, inside the chat, you will somewhere see a link to how to download all this stuff for free. It's all on GitHub, or it will be as soon as I'm done with this tutorial anyway. Okay, so let's go span 2. I have to get a drink again, otherwise I will blow out my voice. All right. Now, remember I said span A and span B aren't that important, but the cloud is important. So in that situation, I'm going to say that I want this to be a dotted line so that it doesn't detract from everything else on the screen. So it'll still be there, it just won't be distracting from the cloud, which is our favorite part of the entire chart. So let's just make this span A, and then we'll draw span B. So copy it, and boom. Yeah, the Ichimoku's just slightly, just a little bit complicated. Let me tell you, if you know how to do this and understand every part of it, you will be in a exceptionally small minority. Exceptionally. Very few people understand it. And it's really not that complicated. It's just, it looks complicated, but ultimately, if you know that the only part of it that really matters, for the most part, is the cloud, then all of a sudden everything gets a lot easier. Okay, we just did all the hard stuff. Figure, and I just need to add all of the plots to the screen. First one I'm going to add is the candlestick plot. Figure dot add trace, and then figure dot add trace for all of the rest. So it's basically just copying and pasting now. It's all easy stuff. So we'll just grab this and copy and paste it a bunch of times. So what are we going to do? Well, I need, how many of these do I need? I need 1, 2, 3, 4. I need 4 more of them. So is that right? I'm just going to throw another one on there just for being happy. Okay, so let's do conversion. Throw a conversion line on top of that. Paste it in. Grab lagging, copy, and we are exceptionally close to finally seeing the Ichimoku automatically generated for every single security we could ever want using 100% free data. So lagging, and this is going to be span A, and this is going to be span B. And the world is our oyster after that. All right, final thing I want to do is increase the size of my plot. I'm going to say figure. Update, do I have to type this out? No, I don't. Okay. Update layout, and I'm going to say that I want my height of my chart to be 1200, and I want the width of the chart to be 1800, and I most definitely want to show the legend. because the Ichimoku is so ridiculously complicated, nobody will understand it without a legend. Do you think Python is good to begin? Absolutely. Absolutely. There is no doubt in my mind. I would say this unequivocally. Python is the best beginner programming language, and even better yet, data science and machine learning are 100% Python. The only thing Python is not good at is mobile programming and desktop programming. Python can do anything else. Web design, if you want the most secure framework for developing websites, there's nothing more secure than Django. I've never seen anything more secure than Django, and it is Python. So that's my opinion, but it is, but you can't go wrong with Python. It stinks for mobile development, but maybe someday that will change. And if you don't care about mobile development, then who cares? I do, and I personally like C# for mobile development, but that's kind of more of an opinion because I have to develop on so many different platforms. Okay, so we just created all the hard stuff, and now we can do the fun stuff. All right, so here is all the information on exactly what all the different lines mean. You can get all that on GitHub, but what I want to do is I want to find out what are the top industrial stocks, and every stock, so I can do that easily. So I can just go, let's call this industrial and sort values, and this is going to be the top performing industrial stocks over the last 5 years based off of cumulative rate of returns. And all I need to do is just say sort values by, and what I'm going to sort is going to be cumulative returns. So by is equal to, and cumulative returns. So much stuff, but now it's easy. Everything is easy now because we just simply type in commands and it spits out literally every single thing we could ever want. And if we want the top performing 10 industrial stocks, we throw that in there and we have it. GNRC is a company that generates, or it creates generators. GE is GE. Old Dominion Freight, I could go through and tell you what all these different companies do, but that's rather boring. What you do see here is that this is Generac Holdings, I believe it's called. It is the best performing cumulative rate of return over the past 5 years of any industrial stock, period. So you might say this is where the Ichimoku becomes extremely valuable. Where can I find a complete Python course with projects, etc.? I have a Udemy course you could get for $10, which is the biggest Python tutorial that exists. If you want it, just tell me. I hate trying to sell stuff, but yeah. I have Python videos aplenty on YouTube. Here, you want a couple? Let's see. I will grab you one, a free one. I will send you a free one. Or it's just on YouTube. It's as free as YouTube is. Let me see if I can find it, and I will print it out here. Give me 1 second. Is it going to show up? Yes. Here is a multi-part course that teaches Python through solving problems. So it's basically exactly what you just said you wanted. And it's free. This is on YouTube. Boom. There you go. There is my free Python course. I have so many Python videos I could literally, I have so many. So there they are. Okay. So now we got the top performing stocks, but what we want to know is now which of these is currently the best to invest in. Well, this is where the amazing Ichimoku comes in. So you just say get Ichimoku, and like I said, in the next video, this video's kind of gotten really long. In the next video, I'm going to show you how to automate the process to find those securities out of every stock that has the greatest momentum to continue to go up. So I just say get Ichimoku, and I pass inside of it GNRC, for example. Let's throw that inside of there. So GNRC, and let's find out if Ichimoku thinks that Generac Holdings is a good buy right now. You can see here it provides us with the candlestick chart for Generac Holdings, and you can see here that it is not a good buy. So it is red and not looking good. The whole period of time in which the security here, it's not wide. The cloud is not wide, and you can see that it just reached a point of convergence. That is not a good time to buy the stock. But what you can see here is back in September roughly, and you can zoom in on all this data. This is Plotly what I'm using. You can zoom in on, let's just zoom in on the period of time in which it was a good buy. So we'll bring in Generac, which is right here. Yeah, there you go. Okay, so during this period of time, Generac was not a good buy. And you can see the candlestick chart here is showing Generac holding. Why is it not a good buy? Well, the reason why is the difference between, yes, it's green, but the width of our cloud is very tight. You never want to invest in a security in which the cloud is tight. All of it, very tight, 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 tight. Boom! All of a sudden it's starting to expand. And it's getting wider and wider and wider and wider. And you can see here is whenever the stock literally goes off the charts and up substantially. And then it continues to subside. See it subsiding? That means sell. And it basically is, it's telling you exactly when to buy and when to sell. But Generac right now is not a buy. So what you could do is you could then say, well, is GE a buy? Who would have ever thought General Electric would be an investment? Good Lord. Okay. You can see here, it is whipsawing all over the place. And this is also a good sign of whether this could potentially be a good investment or not, is because if you have a security that is constantly going up and down, meaning that the width between the span A and span B, the total width of your cloud is constantly whipsawing along, probably not a good investment. So let's look and see if there's any other ones that are good. Old Dominion Freight. That's a nice steady company. Old Dominion Freight. Let's look at it. And you can see that Old Dominion Freight is green over a pretty long period of time. Had a rough spot here. We can do analysis on what was going on with the market at that period of time. But you can see it's showing some pretty strong patterns, had some weakness inside of here, but it's heavily expanding. And as you can see here, it is getting wider. The cloud is widening instead of constricting like it did right here. What's my part? This is Visual Studio Code is what I largely use for Python. So yeah, this is Visual Studio Code. This is just a Jupyter notebooks being run inside of Visual Studio Code. And this is normally what I use. Sometimes in videos, I don't use it. Normally, whenever I do a video tutorial, I use whatever is the flavor of the day, and like PyCharm and things like that. But I personally prefer Visual Studio Code. That doesn't mean it's the best, and I'm not saying it's the best. I'm just saying that that's what I like. Okay. So you can see, I think I gave you enough of a demonstration of how to go and find the best performing securities. And of course, it might be very valuable to come in and find the best performing securities, say, over a 1-year period. And then also use the Ichimoku to then decide if it's a good momentum stock or not. Yeah, PyCharm is perfectly fine. I like PyCharm. PyCharm's great. I don't know, I just use Visual Studio Code because I use Visual Studio Code for every single thing I do, and it's kind of a hassle to switch back and forth. So, yeah. So, maybe you want to come in and you want to try that out. Let's go and let's look at all the other securities. So, let's see, top performing healthcare. I personally think this is fun. I don't know why. What did I call this? I think I called it healthcare. Let's see if I called it healthcare. Let's see if my guess is correct. So let's see if we can find best performing healthcare stocks over the last 5 years. Yeah, I was right. And you can see DXCM, and there's all those. And let's find the best performing information technology companies. Let's IT, that, and there are all of those. Did not have this one. I did have this one, and I also had this one. Let's see, what else do we got? Top communications companies over the last 5 years. And like I said, I think you can figure out quite easily what is the how to pull up the best performing stocks in the last 1 year, 5 years, whatever you want. If you want me to show you exactly where to change that in the code, leave a comment and I'll show you exactly where to change that. Communications. There it is. Netflix, best performing communications. And then you have Google and all of those. Live Nation? Seriously? I think that's Live Nation's ticker. Very interesting. Top staples. How long did you write for that code? Don't know if I understand. Basically, as long as you sat here and watched me do all this, that's about 2 hours, something like that. Staples. What did I call that? I called it staple. So let's see. Top performing consumer staples companies. Boom. There's all of those. Costco. Discretion. I think I called this discretion. Discretion. Boom. There's all those. Etsy. That's interesting. Yeah. Tesla. Tesla's listed as, yeah, I guess Tesla's discretionary. Utility. So let's find the top performing, I think I called it utility. Yes, it did. There's the top performing utilities in the Wilshire 5000 over the last 5 years. In cumulative return, of course, you would have got a 334% return on your money. Not too shabby. Finance. What did I call that? I just called it finance. Look at me. Finance. There it is. And let's go. There we are. There's all the top financial companies of the last 5 years. 821% return. Not too shabby. Let's get this. Let's see if I called it material. I think I did. Yes, I did. Boom. There's the top material companies of the last 5 years. And what's great about all these stocks is that, well, let's do real estate. I think I gave real estate a really weird name, and that's why I remember it. RE State, top real estate companies. And energy, I called it energy and energy, like that. And there's the top energy companies of the last 5 years and how well they returned. Now, remember I said about correlated, and you want to buy securities that are non-correlated. Well, let me tell you something. We have a whole bunch of stock sectors here. I guarantee you, for the most part, that healthcare is not correlated with information technology and communications and so forth and so on. What I mean by correlated, once again, is that when one of the stocks goes down, the other stocks tend to go up. Okay, we want to smooth their return. That doesn't mean these are bad securities, though, because as you can see right here, we have the top performing healthcare stock. It is going to go down and up. Opposite these other sector stocks, it had an 867% return. We have another one. Whoa, this one's through the roof, 172. Let's continue. We have a 486% return. We have a 485% return. See, you can buy non-correlated assets and still get ridiculously good returns. And that's ultimately what you want to do. You want to buy good securities that have great growth potential, but at the same time, they are also going to provide spectacular rates of return. All right, so hopefully all of that, I know this is ridiculously complicated, I'm well aware, but hopefully you got something out of it. And I will continue, like I said, ultimately I just want to create a program that's going to provide those securities that provide the greatest percentage chance of going up. All right, so thank you to everybody that joined me. I appreciate it. You can consider yourself quite smart now, because if you understood what I was talking about, this is high level stuff. So congratulations and thanks for joining me, and I will make another video tomorrow. Tomorrow I'm going to probably make a video about crocheting, so quite different. All right, so thanks for everybody for joining me, and until next time.